Hello, and welcome to this week's episode of the Kepler Trust Intelligence Podcast. Joining me this week is Dominic Scriven. Dominic is the founder of Dragon Capital, an asset management group based in Ho Chi Minh City, Vietnam. Dragon Capital also manages Vietnam Enterprise Investments, which is an investment trust that, as its name suggests, invests predominantly in Vietnamese companies. Before we begin, a quick note that past performance is not a reliable indicator of future results. The value of investments can fall as well as rise, and you may get back less than you invested when you decide to sell your investments. It is strongly recommended that independent financial advice should be taken before entering into any financial transactions. And with that out of the way, I hope you enjoy the conversation.
Dominic, thanks very much for joining me. Perhaps to start with, could you talk a bit about Dragon Capital, what the company does?
Yeah, sure. Dragon, we call it Dragon. Dragon Capital is a private firm. Next year we will be 30 years old. So we're owned by, broadly speaking, by ourselves. That's management, and that's very important because that gives us the notion of being independent, and being independent is extremely important if you're keen to make decisions, and particularly make decisions about somewhere as far away from major centers as Vietnam is. So we are focused almost totally on Vietnam. We have experimented in Cambodia and Laos and Myanmar, and most recently Bangladesh. But Vietnam is what we know best and what we understand. It's sort of the DNA, and it's where our headquarters are, and it's where most of our 150 colleagues are. And so we've been, for the last 28 years, we've been investing other people's funds and our own funds as well, in the growing Vietnamese capital markets, which basically means equity market, and to the extent that we're able, the debt market's also very interesting, mostly on behalf of international investors. So our biggest clients are sovereigns, for example, or endowments or families. But we also have a growing following amongst investors in Europe via private banks and wealth platforms, and also in the UK from those who invest in investment trusts. So one of our biggest fund is an investment trust listed in London, one of the FTSE 250 companies. And I suppose really what we're trying to do is to bring the world to Vietnam, help Vietnamese companies be long-term participants in, partners of, contributors to the story of modern Vietnam, which began with renovation in the 1980s, but didn't really pick up until then. Vietnam's first company law was in 1992, and Dragon started in 1994. And we thought there was going to be a stock market in 1996, so we would retire in 1997. But alas, that didn't happen. And the stock market didn't get going until 2000 because of various crises around the region. But nonetheless, it's been a long journey, and of course there's lots of learning. Vietnam's been learning about the world, and the world's been learning about Vietnam, and that includes us. And what we have or haven't achieved is best best told through a track record, I suppose, isn't it? An investment track record. So our first fund was launched in 1995, but it didn't really get going until the stock market started in 2000. And so from 2000 to 2022, Okay, so the market's dropped in the last couple of months, but if we say to the end of 2021, that was a sort of compounded 21-year track record of 13.5% a year, in dollar terms compounded. So $1 became 12, and I think that's what we try and do. Everybody wants to shoot the lights out, but generally, in my experience, if you shoot the lights out one year, you have a horrible year the next year. And so what we really try and do is grow long term with Vietnam and manage the risks. Yeah, that's what we continue to do.
Great. And can you talk a bit about how you ended up in Vietnam? I mean, how does a guy from the UK end up in the early 90s setting up a financial services business in that country?
Well, it's not that obscure, actually. My first job was in M&G in London. So I've been an investor for, all of my career. That was in the 1980s. I then gravitated to the security side in Hong Kong, worked for a Chinese company in Hong Kong, and then visited Vietnam at a time when I'd been working for 5-7 years, and actually I wanted to study. I wanted to take a couple of years out and study, and I really particularly wanted to study a tonal language. And if you look around, I mean, realistically, some people would say Thai is a tonal language, but frankly, tonal languages really come from the sort of character-based or ideographic languages, of which the largest is of course Chinese, but Vietnamese is also at heart an ideographic language, which means that the meaning of a word comes from a picture, not a sound. So we're in Western languages, we are phonetic, so the meaning of a word comes from the sound of the word, which is why pronunciation is so important. But in for example, Vietnamese, the meaning of a word comes from its picture, which is depicted vocally through a tonal sound rather than a phonetic sound, and that really, in some ways, indicates a different route of ideas from the brain to the mouth or to the vocal cords, and I was very interested. I still am very interested in that. The interesting thing about the Vietnamese language is that because of the country's history through French colonialism and the presence of the Jesuits, that actually Vietnamese is written in the Roman alphabet. So it's therefore that much easier to learn for a Brit, which is how I ended up at university in Hanoi in 1992, and then when I finished the uni, we stumbled across the Journal of Social Sciences. That was when we got onto that. I realized my studying was done, and so I teamed up with some people and we formed Dragon. Really, I mean, and I wasn't joking. I mean, we really did think there was going to be a stock market and it would all be wonderful very soon. It wasn't. It turned into a bit of a grind for 6 years, but the overall journey has been good for most of the stakeholders. I think I include, obviously Vietnamese people at the forefront of that. Yeah.
And I mean, how has the country changed in the intervening nearly 30 years since you set up the company? I mean, if I were to compare it to, say, China over the same period, that would obviously be a huge amount of economic development. And was it similar in Vietnam?
Yeah. People say the leopard never changes its spots, right? And and Vietnam is still very distinctly Vietnam. In fact, maybe even more so, because the country has grown enormously in understanding and awareness of the rest of the world, and also in its own self-confidence. I mean, I think one of the features that I would point out is that for many, many years, the Vietnamese nation was quite bashful and unwilling to to talk about itself and its achievements, such as they were. But that's a rather sort of philosophical thought. Most basically, the country has completely changed economically. When I arrived here, Vietnam's only friend was the Soviet Union, and the Soviet Union was, of course, collapsing in the early 90s. And so, the Vietnamese economy was collapsing, such as it was. That was, of course, a period when there were many Vietnamese migrants overseas because of poverty, economic reasons, as well as other reasons. And I remember the country's biggest export was scrap metal. And in 1992, exports were $2 billion and imports were slightly less than they were like $1.8 billion. And GDP per capita was $227 a person a year, which is really where the World Bank goes, I mean, we just can't count. It's so little. And now, exports are $400 billion and imports are $400 billion, and GDP per capita is $4,500. So the change has been enormous. And of course, it's not just a case of numbers, although I think the World Bank would still have us believe that the eradication of poverty in Vietnam is the fastest example of such in the whole of the World Bank's database, which is very impressive, because what's the job of a government? It's to look after the welfare of its people, isn't it? So, that's one very obvious example. I live in a city. I'm looking out of a window at the skyline of Ho Chi Minh City, also known as Saigon, and I'm looking at tall buildings, 50 stories. None of these were here. It was a 1-story, 2-story city. It's now a city of high rises. So that's all changed. Bicycles have gone through motorbikes and are now onto cars, and consumer goods. People have disposable income, so of course they're traveling overseas and educating their kids overseas. There's a lot of Vietnamese studying in the UK at the moment, at good schools, and so it's an emerging middle class society. Of course, what one has to remember is it's quite big. So if Vietnam was in Europe, it would be the biggest country, 100 million people. And when one thinks of that, one thinks of really an urban population the size of Malaysia, actually, and a rural population the size of Thailand. And of course, the two are slightly different. But what's happening is that the rural population is gradually moving to the urban population. So I think the ratio now would be somewhere 30 to 35% urbanized, and I think the government would like to see that closer to 40 or 45%. So what that means is where I live, which has been, everybody said it was 5 million people. We didn't really believe that. We thought it was more, and then the number was increased to 8 million. And we thought, well, that's a bit more like it, but it's still not that. And then a couple of years ago, the government went, well, actually, it's 13 million. But in fact, if you include those who work there every day, it's 14 million, and it's growing at 500,000 a year. So that's the sort of urban agglomeration theme that's very obvious in Vietnam, and that mere fact of people coming from a rural economy into an urban economy is itself responsible for, big increases in productivity. So Vietnam's got a 30-year track record of, I'm going to say, 6.5% GDP growth a year, which is good. It's not quite China's, but it's a good level. And that's another testament to the sort of approach that the country's government has and its regulators have towards the economy, which is to be open, to be particularly open to foreign investment, but now very much focusing on the domestic private sector, to have lots of trade agreements, to be very pro-trade. I mentioned exports, imports, each 100% of GDP. That's an extremely high degree of openness for the economy. And then to do all of this with a pronounced commitment to stability. So stability in law, stability in politics, stability in society, in institutions, and in policies, monetary policy and fiscal policy, so that there's a level of predictability. And that's the sort of social contract here, because Vietnam is not a traditional democracy in the traditional Western sense. We have only one political party here, but part of the social contract is that the government guarantees stability, and the people accept the governance structure of the country. And generally, I'd have to say, that has worked well for this last 30-year period. Yeah.
I mean, you touched earlier on in the conversation about how performance for the trust, or perhaps for the Dragon as a whole, has dipped a bit this year, which I think is completely understandable. But I mean, how did Vietnam as a whole and companies in the Vail portfolio fare over the past, let's say, 2-3 years during COVID? And then looking forward, what are their prospects like?
Well, so to answer that, let me just briefly explain how we approach investing. So we've been talking about some of these big themes throughout the economy, and they're multi-year, multi-decade themes, in fact. And so you don't need to be a rocket scientist to get the broad thematics correct, but what's important is how you approach companies. And there's no shortage of companies here. And so how does one look at companies? And we've built our own internal research database, and we've got a big team of 20 people on the research side, 10-12 people on the portfolio management side, and we have a fairly rigorous process, the core of which is our approach to convictions. So most of the top 10 holdings, I'm going to say sort of 8 out of the 10 top 10 holdings will be big conviction holdings, where we might be up to 5 times overweight the weighting in the index, and that's based on our analysis of businesses now, the businesses in the future, and also importantly, the stock valuation, the stock dynamics, where's the alignment, and how does that relate to the overall risk profile. And so when we look at the stocks in the portfolio, they're companies we know well. We have big holdings in them. Generally, we are a long-term investor. We may trade around holdings, but we if we like a company, we'll probably like it for a long period of time. That might mean 5 years, it might mean 8 years. Our longest holding is over 20 years in the portfolio. So how have the companies been faring? Well, Vietnam, as we recall, didn't have a year of negative GDP growth through COVID. So it had positive growth in both years, although of course that was a very disruptive time for companies. So I think in 2020, companies generally performed rather unimpressively, but 2021 there was a very strong recovery, nearly 40% earnings growth across our universe of 80 companies, and so we don't have that sort of bounce back effect this year, but we do have continued strong top line growth, and of course there's ebullience and exuberance and confidence in Vietnam. So I think our universe is reporting this year, and we can check that. We've checked that in the first quarter, around 20% growth in sales, and that's slightly higher even at their net profit line. So companies are doing pretty well. The market's down 17 to 20% year to date, 18% I think, and that's partly reflecting the global situation. It's also partly reflecting the fact that we had a lot of individual investor interest last year in the market, and some of that interest has been shaken out by a bit of a regulatory shakeout, which is probably not bad for the market in the medium term. So in fact, when we look at our universe, it's trading on 9.5 times this year's forecast profits, which it's a long time since Vietnam has been that lowly valued. And of course, you mentioned the trust, Vail, our investment trust, that's trading at a discount to that. So, really it's, we're looking at sort of below 8 times earnings on the portfolio. And the companies that themselves, the underlying performance is still looks pretty good. I mean, most of our holdings, again, refer to the top 10, are what I would call private sector companies. So they are companies that have been built by individuals or groups of individuals. They could be banks or retail or housing, construction, urbanization, infrastructure, materials, technology. So a decent range of sectors. And our convictions remain, absolutely. So our biggest holding is VP Bank, which is a bank that has pioneered digital, let's call it machine-based learning, to become the largest provider of consumer financing in the country. It's a sort of pioneered that whole industry. And so that's a success. So when you look at the market as a whole, you see, there's big banks at nearly 30%, and real estate is nearly 30%. So, it looks a bit old economy. But when you factor in what these underlying companies are doing, as I mentioned, VP Bank with its approach to digital, or I can tell you, Vin Homes, which is a property developer, but each one of their projects is 20,000 units. So this is that urbanization on a massive scale. Or Hoa Phat, which is one of the 20 largest steel producers in the world. Or Moby World, which is a company we love, which has pioneered the growth of urban retail. So what people refer to in Asia as the decline of the wet market and the growth of urban retailing, which they've done with an extraordinary approach to their operation model. And in fact, I suppose that's our biggest e-commerce play. They kept Saigon fed throughout the COVID lockdown. Yeah, so it's interesting. And the companies we're at a relatively good stage in the economy where Vietnam's still competitive, and the excesses that have happened in other parts of the world have not really occurred here. So, for example, Vietnam had no monetary policy surge over COVID, and nor did it have any. There has actually been a minuscule fiscal program as a result of COVID. So, we haven't had what we've had in other economies. So, we don't have any of those excesses.
Cool, very interesting. I mean, the last point you touched on implied that perhaps inflation was not the sort of problem that it is now in the UK or US. But having said that, do you think, first of all, is inflation a problem? And secondly, if it is, do the companies in the portfolio look reasonably well positioned to stay in business and not suffer too much as a result of that?
Well, that's absolutely the right question to ask, David, isn't it? Because it's top of everybody's agenda right now. So what I can say, first of all, is that, I fall into that school that, inflation is always and everywhere a monetary phenomenon, in some way or another, however however it appears. And as just mentioned, we haven't had that severe monetary injection that is responsible for at least a significant part of inflation in other economies. And so inflation is at the moment, it was 2.5-3% last year, and I think it might hit 4.5 to 5% this year. So it's not insignificant. But for example, deposits in the deposit rate in the banks is also 5 or 6%. So we still have positive real interest rates. You can see from that we've got a serious, we've got a real monetary policy. And that's played its role in keeping inflationary forces at bay. However, of course, we're not spared the issues that are apparent in food and energy, and disastrously so in some countries. So I mean, what can one say here is that in terms of energy, Vietnam is a net energy importer, but energy imports last year were $12 billion against a $400 billion economy. So it's not nothing, but it's not an overwhelming risk factor. And of course, in terms of food, Vietnam Vietnam imports food, but if you talk about basic grains and protein, this is how we keep ourselves active and fed. The country is a massive producer of both of those, fisheries and rice, top 5 in the world. So we have access to energy, and we have access to food. Which means that the supply chains can be kept open. We have less control over pricing, although there is nothing's there's no subsidies here, but so the budgets is reasonably flexible. Of course, we've got lots of foreign exchange reserves as well, so we keep our eyes on inflation. Your question was companies. There's a little bit of wage inflation. There's obviously a little bit of input inflation, although producer prices are not quite as high as they are, for example, in the rate of increase in producer prices, nothing like as high as it is in China, from what I believe. And so I think that companies have some residual pricing power, ability to increase prices to protect their margins. So we're not yet seeing any erosion of margins, and I don't think we will this year. I think we've got to keep our eyes on it, but we that's not yet one of the major concerns.
Okay, and I think something else that is perhaps on people's minds at the moment, particularly after the invasion of Ukraine and ongoing lockdowns in China, that sort of thing, is perhaps that investing in, let's say, more authoritarian countries carries more risk than people may have appreciated previously. I mean, you said that Vietnam is a one-party state and its goal is for stability. Do you think there's any sort of risk there that people should be aware of? Are there similarities to, say, the CCP, or is it a rather different system?
Well, I think that's a really interesting question that would be worthy of a separate conversation all on its own, which we obviously don't have the luxury of. I think my own experience is that predictability in political systems is probably better than the reverse. So Vietnam would fall into a benign autocracy, I suppose, rather than I mean, technically it is a democracy, of course. We have elections and everybody votes, but as mentioned, there's only one party, and I think most people would feel that sort of benign autocracy, which incidentally I think is the same description as would be applied to Singapore. Benign autocracy, even though it is technically a democracy. And if you look at the track records of benign autocracies, they're termed benign for a reason. Is that they don't inhibit upon the rights of people. I'm not an expert, but I suspect that Russia would not fall into the description of a benign autocracy.
Yeah, no, I don't think so either. I mean, are there any other points of interest or things looking forward that you think that investors should be aware of, either about the trust or about Vietnam in general?
Well, one thing we haven't talked about, I have two things we haven't talked about. Maybe we could end on that. One is that in terms of the real economy, a key driver dynamic at the moment is the relocation of the China-based supply chain. And we talk about reshoring and deglobalization, and these are all risks, but anecdotally, people can't just close up their factories. So what's happening is they're reordering their supply chains, and I think around the world there are various countries that are benefiting. One would be Mexico, another would be Poland, maybe Turkey even. It's not that stable, but maybe even Turkey, and Vietnam because it's big and because it's slap in the middle of Asia and it's right next door to China, and it is a benign autocracy, and so people feel safe here. And so the flows of, first of all, trade, which in turn then brings foreign investment, and then in turn after that brings capital flows of from China and elsewhere, but particularly China into Vietnam is a huge dynamic here, and I think it's going to be a very strong dynamic for at least the next 3 to 5 years, and so that's providing a boost into the arm, if you like. It's a case of Vietnam eating a little bit of China's lunch, and I don't think anybody's begrudging that, because for the US and for China, they appear to be both reasonably comfortable interacting with each other through Vietnam in respect. So that's one thing in terms of the real economy. The other thing in terms of what we might call the financial economy is the impact, notwithstanding my comments about monetary rigor, the fact is that as an economy develops, the financial system becomes more efficient. It attracts more funds, and so the balance between supply and demand alters, and interest rates become structurally lower. So while deposit rates are still positive, they're maybe half where they were 10 years ago, and we're seeing people begin to look to alternative ways of investing and using their capital. And of course, that in part is good for financial markets. So one of the reasons Vietnam's PE rating, its valuation of its businesses, is so low, particularly when compared with others in the Asian region, is because the level of participation by domestic investors is so low. It's been so low, and I think that's changing. We've seen that through the last couple of years. I think that's changing, and I think for the next 10 years or longer, we're going to see a structural increase in local investment in Vietnam's financial markets because of lower interest rates. So those are two things that, very much the fore as we look at our business. Yeah.
I mean, maybe one final question, just to your last point. If you were to compare stock market participation to somewhere like Taiwan, for example, relative to where Vietnam is, I mean, what sort of stage is the country at?
Well, that's a very good comparison. So we are in Vietnam. We are about where Taiwan was in the late 80s or 1990. So
Okay.
that's 30 years ago. And the comparison with Taiwan is good because in terms of culture and philosophy, there are strong similarities between the two. And I suspect that it won't be exactly the same, but they won't be that different. And so what Taiwan demonstrated was a year on year over 25 or 30 year increase to structurally high levels of engagement in domestic financial markets. And that's not been all the proverbial casino approach at all. Taiwanese institutions are really quite conservative. We have them amongst our client base. And in fact, Taiwanese were only recently permitted to invest in Vietnam. So I think that the comparison with Taiwan is a good one. And one could also compare Thailand with Korea, and of course, probably with China as well. So that's something we look forward to with enthusiasm.
Great. Well, Dominic, thanks very much for speaking to me. That was all very interesting. And hopefully we'll chat again soon at some point.